Hello everyone, this is Mickey here, and I'm just going to be doing a weekly recap for the week of October 2nd, 2023. And overall, we actually had a green week in the markets. Believe it or not, right now the markets held up. We got a very nice bounce from that 4,200 area, which is essentially where I was looking for the markets to do. We essentially had a little bit of wick below there. I think we got to like 418 on the futures, or sorry, 4,180 on the futures technically. As you guys can probably tell, this was not the future. Sorry, this is the S&P 500. If I just shift over to the futures down here, I believe we did go down there. No, we didn't. Okay, well, I don't know. I was probably looking at a different chart then. All right. Anyways, well, you guys get the idea. We tagged the 420 area on the SPY. We got a nice reversal, and that reversal came with volume. Over 113 shares traded that single day. All right. So again, that's nice to see. Looking at Market Cipher, we did get a very nice bounce. This is the Bitcoin chart. Let me get on the SPY here. So again, you guys can probably tell we are now in red money flow, which is very negative because now the bears are in control. This is we're now in a short-term bear trend. We'll have to see if the weekly trend is going to shift towards the bearish side, and if it does, that is going to be an eye-opener, because then we may not go to new highs like everyone thinks. A lot of people think that this is the low right now, and again, that needs to be determined. We'll have to see if this turns into a wave 2 reversal and something like this, right, that we keep going up, maybe back up to 440. And if we fail there, if we fail and we start to come back down, then you have put in a significant top in the market, right? And that will come in line with the monthly chart showing us that October is going to be a topping month, and we're going to go lower from here, right? And you guys got to get ready for lower prices. And right now, we had a very big reversal on Friday. The job numbers came in hotter than expected, which is actually bearish in the sense that the Fed is going to have to do more work. But the market, translated that to bullish, because they said this is the last bullish, job report that we're going to get. It's only going to be downhill from here, which is technically very bad for the economy, but it's bullish for the market because they're forward thinking, and they see it that the Fed is not going to raise rates anymore in November, and that they're done raising. I mean, they've been saying that every meeting that this is the last rate hike, right? This one is the last one, and if it's not the last one, then the next one's going to be the last one. So they're kind of like drug addicts in a sense, like almost like they're addicted to low interest rates. So every time you give them a little bit of hope, the bulls will go crazy and they'll buy stocks like it's no one's business, right? And right now we have the dollar pulling back as well, which is very bullish for the market. When the dollar comes down and yields come down, you see the market will rally like it's no one's business. Right now, the dollar is still in a strong uptrend. It has yet to break this support line, but if we do break this upsloping trend line, then that's going to be your first signal that you may have a significant top in the dollar. And looking at the weekly time frame, it's a very big topping candle, which is a bearish signal. But again, you never know what could happen next week. Right now, we do have some news on Saturday that I believe Palestine has declared war on Israel, or they're both or one or the other. But regardless, that's actually like some pretty bad news. So you should see oil spike at the open next week, as war times creates huge demand for oil. Natural gas is already breaking out. We'll get to that in just a bit. I just want to finish my analysis on the S&P 500. But right now, so yeah, we're at a pretty pivotal point at the moment. We could be in a beginning of a top here, or we have found a significant low and we're getting ready to go to new all-time highs, which would put us at a nominal high. And after that, we could have a very big 50% correction from there. So we'll take it as we go next week. Next week we do have the CPI, so that's going to be a very big news event. And again, you can see that the momentum has taken a huge, cliff dive, in terms of, yeah, I mean, in terms of momentum, you can see the momentum waves. We've really lost a significant amount. The green money flow is starting to decrease. The monthly pattern is showing the same thing. It's the beginning of a rollover, not on the Qs, but on the SPY and the diamonds and the IWM. The triple Qs is the only one that has not a topping signal. And when I look at the IWM, I use it as a leading indicator. And right now, the IWM is signaling, you know, a huge potential drop in the market that's coming with the 22 and the -5 on the monthly pattern. And looks like we put in a B wave top here potentially, and we're getting ready to make our leg down in a C wave. And I know you guys probably take a look at the indicators, right, on Market Cipher, and you're seeing, oh well, we had a red diamond here, right, and we didn't get any significant drop in the market, right? But you also had a huge amount of green money flow. I would say that this is really good green money flow. So the markets are supported, low interest rates, you know, money printing, and this was in 2019. And then you had a huge drop in the market, and then you still had even more money, more monetary policy, you know, and more money printing, and then that created a huge catalyst. But now what you're seeing is a significant tightening, right? You're seeing that the Fed is unloading their balance sheet. If you actually track their balance sheet, let me just head over to their balance sheet here. It's all the way down here. I keep all my economy stuff at the bottom of the list because I don't check it that often. I only do this on a weekly basis. So if we check their balance sheet on the weekly time frame, the Fed is continuously unloading their bonds off their balance sheet, right? They are clearly not buying anything, and this is causing even more pressure on interest rates, on the bond yields to go up higher and higher and higher. And eventually, you know, they're going to get to a point that they won't be able to keep selling like this, and they're going to have to stimulate. But I do believe the markets will correct significantly before that happens, before they start stimulating again, right? And we're looking at the monetary M1 and M2. It is still decreasing on a monthly basis. M2 is, you know, starting to roll over as well. Same thing for M1. M1 is just taking a little bit of a steeper dive here. So overall, I still do believe that we are going to see some more downside in the markets, but we'll have to see if it's like I said earlier, if this is the bottom and we're going to go higher. All right. Okay, so I think that covers it for now on the indices. Let's get into some commodities because we did get some very big moves this week in oil and natural gas. So right now, I think if you guys have been following me on Crypto Mickey, or like if you know me at all, I've been extremely bullish on natural gas. Like you wouldn't believe. I've been like bullish since April of last year, this year of 2023, when, you know, this massive sell-off in natural gas happened. I was accumulating so many longs at the lows here, and people, I mean, I'm not to toot my own horn and say like, oh my God, look, I was right. But yeah, like we've put in a significant bottom, right? You've had a dramatic sell-off. People were still looking to short for it to go lower. And now you're getting a dramatic breakout. And, you know, nat gas is up 63% off its lows. It's looking extremely bullish with a -5 and a 16, and you could be looking at it right now on the weekly time frame and say, oh my God, this is so bearish. There's red money flow. But when you look at the larger time frames, on the monthly time frame, you have a significant amount of green money flow. You have a 60 and a -3 on the dual band strength index, and nat gas is getting ready. It's just getting ready to squeeze higher. It's getting ready to go up as high as $4 and $4.75. That's probably when I'm going to be starting to exit some longs, and then getting ready for a pullback and reload for another long towards the upside, because nat gas has ways to go. It's extremely undervalued. It's extremely sold. You know, it's been selling off for so long. So we probably have another 50% move coming in the coming months. I don't know if it's going to happen all in 1 month because nothing goes up in a straight line. We all know that. Daily time frame looks very good, and a weekly time frame doesn't look that bad either, considering how the monthly looks as well. All right, so I think we've put in a significant bottom for nat gas. And then again, just a cherry on top, looking at the wave edge indicator, look at all of that accumulation. Look at that accumulation at the lows from the whales. The whales, the smart money, buying up all the long contracts at the lows on the weekly time frame. And I believe you saw a green X at the bottom as well on the monthly time frame. So a very long-term, long signal for nat gas. So you got, you know, your bottoming tail, a retrace, right? Stopping out everyone that's in their longs, right? And then you got a huge move in the coming months that followed. All right, so overall, very bullish on that gas. Now let's move on to oil. So oil got a pretty dramatic sell-off here last week. We actually broke this upsloping trend line that I've drawn here. And again, this was pretty significant. This may have been a top here, but we could technically still come up. We could still go higher, believe it or not. So we could still be forming a 1, 2, 3, 4, right? And then this 4 is really starting to extend right now. And actually, we came below the 1 here. So I'd have to maybe do some more analysis on this, but we could still technically go a little bit higher. But overall, you know, it's not looking that bad. I'd maybe have to do a redraw this because now we're starting to invalidate some things. But I wouldn't discount oil out of the picture given the news that we just got over the weekend of the war in Israel. So I mean that may be a catalyst for oil to go higher. And again, that would be inflationary and very bearish on the markets. But we're looking at the market cipher right now on the weekly time frame. We do have a red dot on the weekly time frame. We still have red money flow. We have not crossed into the green. It may be bullish at first when oil starts to come down. It would say like, oh, it's deflationary. Inflation is going to be under control. But we'll have to see. We'll have to see about that, right? And then you don't want to take anything for granted in this market. So there you go. Oh yeah, maybe this was the count that I had drawn out. Okay, so that's 1, 2, 3, 4, and then you're in your 5th wave. So maybe we topped out in the 5th wave now, and we're gonna get a bounce next week. We'll have to see if it goes to new highs. If it goes to new highs, then you're just gonna go in an extended 5th wave. All right. So okay, that's basically it for oil. And we'll just wrap it up with the dollar here and maybe some yields. So the dollar right now, again, believe it or not, it can still go higher. It can still bounce from where it is now and, you know, go higher with, you know, the news events that we may be getting soon with CPI, the war, yada, 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 a lot of economic news. But looking at the chart, we are in a strong uptrend on the daily time frame. We have some of the biggest green money flow I've seen since maybe like COVID in 2022, and they were printing so much money. Everyone was piling into the dollar. Dollar was going up and up and up. And the weekly time frame, you know, it's showing that we could still technically go higher. We did get a nice pullback this week, and it ended very bearish with a very bearish topping candle on the DXY. But you know, you're in such a strong uptrend. I would not discount the dollar out right now. And looking at the monthly is looking extremely good with strong green money flow, a tight, you know, bottom here on the momentum wave, a nice green dot for, I believe that was last month, and you got strong dual band strength index numbers. So if the dollar goes up to these levels, that would be extremely bearish for the markets, and it would be, I wouldn't want to be long equities at the moment if that were to happen, right? But that's in the coming months, so that you can have a lot of time to adjust. And then finally, wrapping it up, we'll take maybe a look at the yields here. So the yields have been on a steady breakout. They are going parabolic right now, especially the 20-year. And right now, the markets, right, are really, you know, paying attention to yields, and especially the inversion of the yield curve, right? So right now we have 2s and 10s. The yield curve is tightening because the 2-year is not moving up. It's just chopping sideways at the 5% level, but you have the 10-year breaking up. So you have right now you have a tightening of the yield curve, and it may uninvert at any point, at any moment, right? If the 10-year gets above this 5% level, then you have an inversion, right? Or a reversion, or whatever you want to call it. But overall, that means the 10-year is going to be higher than the 2-year, and that is bullish for the market. So you do have that bullish catalyst if the 10-year does that. But if the Fed raises the rates, then the 2-year is going to go parabolic as well, and it's going to start to, you know, we're still going to have a very big yield curve inversion, and then the financials are just going to be in a whole lot of mess then, and it's just going to get worse for them. But overall, I think we can all admit that the lows are in for yields, and it's going to be higher rates for longer. You have broken a 40-year downtrend in yields, and it's very hard for the markets to accept that right now. But, you know, maybe in hindsight, they're always going to say, oh, it was so obvious. But right now, everyone is buying the dip in TLT, right? Everyone is saying this is the low, right? This is the low in TLT. This is the low. 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 And this is the low, right? We keep gapping down and keep gapping down and keep gapping down. And I don't know what it's going to take for people to realize that rates are going to go higher from here, and that buying the dip in TLT may not benefit them in the long run, because they're just going to have to average down so much. They're going to have to throw so much capital at it. Eventually, they may capitulate. And when they do capitulate, I do think that we are going to have a top in yields, and yields will start to pull back. Okay? So TLT is definitely a tough trade right now. It's in a steep downtrend. I know a lot of YouTubers were talking about, I'm buying the TLT for the long term, and I'm buying now, and I'm throwing a huge amount of capital at it, and I just can't wrap my head around it. When I look at TLT, I think it's going to go lower, right? I don't see any significant bottom in place. I see increasing red money flow. This reminds me of natural gas, plummeting, sort of, when nat gas was doing this massive sell-off. When I look at the TLT, I just see this as very similar situation. I could just take a look at it very quickly for you guys. Take a look at the NYMEX. There we go. So you guys can probably tell, this massive sell-off in nat gas. We get on the daily time frame. You can see how much red money flow we had, and I'm seeing essentially a similar situation in the TLT. I mean, just look at that amount of selling. This is extremely hard to pick a bottom, and when you do find a bottom, the bottoms don't last, and you just keep gapping down lower. You have more manipulation, more selling, more longs getting liquidated, more longs getting stopped out. So overall, excuse me, I had a little bit of a burp there. You can long the TLT for a quick bounce, right? It can bounce, believe it or not. Yields can pull back at any time because they are overbought. But when they do, they're going to start to go lower. All right, and that's the whole mindset that you gotta start, accepting. Even looking at the larger time frames, the monthly, the weekly, the 4-day, every time frame looks bad on bonds. So bond prices are going to go lower and yields are going to go higher. Anyways, that's it for now. Hopefully you guys, use this video to your benefit and you make some good trades next week. I'll catch you guys on the next one. Peace.